Hello, everyone. Happy new week to you. Happy Monday, everyone. Good morning, good afternoon, and good evening to you. That is depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to another edition of the Forex Morning Mastery, your daily dose of financial insight and trading strategies. It has been a challenging past week for us all in this community. Remember, we had some challenges as a result of the indecisive phase we saw in the market, which came in as a result of uh, the odds as regards to the timing of the federal rate interest rate cut, which of course wasn't sure, and the data coming in from the United States was so resilient, giving us an insight into how strong the United States economy is and putting a clog wheel into that expectations that we were looking forward to a rate cut as early as the month of March. And as a result of these development in the financial landscape from last week, we did not witness significant traction on the XAUUSD asset and the USDJPY, but the US all did very well. Of course, the asset took advantage of the resilient US economy to increase its asset, and except for the US all asset last week, which did phenomenally well, the other asset didn't do really well at all. And I do know that there's a lot of concerns in the house, as I did got some messages as regards to that. Now, this is where it is very, very important for us to diversify our portfolio by spreading our investment across different asset classes and of course industries as well. Now, I am an advocate of this, and if you look at what I usually do, I have a bunch of assets that I normally trade for the week, including the US Oil Spot, which is from the energy sector, the gold, which is of course a commodity asset, then the currency asset as well, which is the USDJPY or the GBP USD, depending on whichever one I choose for that particular week. And then we have the equity market, the US Tech 100, popularly known as the NASDAQ, which I also include into my portfolio. And this strategy helps me to reduce the impact of poor performance in one particular sector, enhancing my overall stability and resilience of my portfolio. And this is one thing I would also encourage us all to do too. So instead of focusing on one particular asset or two assets, try to ensure that you have a wide range of assets covering different sectors. Of course, most importantly, um, most of us usually trade currency asset most of the time, assets which are in link with the US dollar. For me, it's still putting your eggs in the same basket. So last week was one way to teach us that we need to diversify our portfolio and not putting our eggs in one basket. So I do hope you can also adopt this approach in your own trading lifestyle as well. So I just needed to state that so that we can all have a better understanding. And one thing we should all know is that in the financial market, whatever decision we are making is more or less an educated guess. I usually mention this countless of times during my session, and with this basic understanding, it is reasonable that we do have a well-defined risk management strategy, and one of your risk management strategy is to ensure you diversify your portfolio. So I hope I made quite a lot of sense on that one. If you have any questions, feel free to drop them in the comment section. Trust me, I'm here and willing to be of help in that regard. So with that being said, I welcome you once again to yet another edition of the Forex Morning Mastery, where we shall be diving into the financial landscape, looking at things from a technical standpoint, and of course using our basic tools such as trend lines, key levels and chart patterns to unravel the potential trajectory for this week. So based on the on this new week, I did share a couple of videos during the course of the weekend, which includes the USDJPY and the XAUUSD, which is going to be the assets we will be looking at for this week. And of course, we'll also be including the USOILSPOT this morning, where I will be doing a top-down analysis on that asset for us to really have a clear insight into what is going on in that particular asset from a technical standpoint. And for those of you who are joining us for the first time, you are highly welcome on board, and I'm very, very excited to have you around with us this morning. And I do know that you will be wondering, what is this all about? What is the Forex Morning Mastery with Sheriff Daramola all about? Well, like I said earlier, I usually share a bunch of videos during the course of the weekend, and the Forex Morning Mastery was born out of the necessity that we do want to be doing follow-up details on these videos on a daily basis. So we usually come here together as a community and as technical traders as well to do follow-up, engage in reviews of our current positions, and see how we can strategically position ourselves for the next move, of course ahead of both the London and the New York session. The session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And it's important for me to also state that my aim here is to equip you with the knowledge and skills necessary for you to make your own independent and of course informed trading decisions. Now trust me, the more time you spend with us in this community, the better you get to comprehend our analytical approach, which over time you will be able to use the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you all on board and encourage you to actively engage in the comment section. So with that being said, here I can see a couple of comments in the comment section from Jonah Aruna, Eric Mudavadi. Good morning to you guys. You guys are just wonderful. Glad to have you around with us this morning, and I do hope you all had a wonderful weekend. For me, I did. It was a very, very short one. I actually took my family out for a weekend trip, and we had fun. And it was so short that the weekend was over within the blink of an eye. But I do hope you had a wonderful weekend too out there. So with that being said here, and as we gradually approach the last trading week for the month of January, let's dive right into the business. And one thing I would also like to state here is that this week being the last trading day of the week, it also wants to be coming with its own peculiarity, as market participants may want to be rounding off on their trading activities for the month, as companies and organizations will be doing a recap of what they did over the month, and this may likely lead to some profit-taking activities in the market too as well. So all of this we shall be taking into consideration while we review the current market structure today. So I encourage you to grab your favorite beverages, take something to keep you company, and let's dive right into the business. So as usual, the first thing we normally do in this community every morning is to ensure that we keep tabs with the fundamental factors that will be affecting the market sentiment for today and of course for this week, so that we can have a background knowledge of what majority in the market will be looking forward to. And of course, as technical traders, we know that the anticipation of this event usually affects the market sentiment, which of course will dovetail on the chart as price action. And importantly, when we monitor the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart hereby giving us valuable information and of course better timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we are monitoring for this week, we are going to be focusing on economic features from both the United States and the Japanese economic docket. However, for this week, we really do not have any high impactful event from the Japanese economy, but we have some mid-tier economic features which we're also going to be including into our watch list on the economic calendar. Now, if we look at the economic calendar here, the first event for this week is coming in, though it's when I looked at the economic calendar from the perspective of high impactful event, there are no events for today, Monday, January 29th. However, what I did was to include the mid-tier event. So let's see if we can see something to look out for. Now, for today, January 29th, we have the unemployment rate data coming in from the Japanese economic docket. Now, this is a data usually released by the Ministry of Health, Labor and Welfare, and of course it measures the percentage of unemployed personnel. Personnel are employed people, of course, unemployed people in the Japanese economy. And of course, a high percentage will definitely indicate weakness in the labor market, which will influence the strength and direction of the Japanese economy. So if we see anything higher than the expected data, or anything higher, of course, it shows that the labor sector is contracting. But if we see data lower than the expected figure, or even lower than the previous data, then it shows that the that sector is expanding. Now let's look at what the data for the previous month says here. That is for the month of December. It came in at 2.5%, which is a little bit okay if we compare it with other economies. And we have consensus economists projecting another 2.5% based on what is on ground. So it shows that things are still looking the same. Things have not really changed based on the previous data, but we still look forward to what the actual data will be. Will it be just as expected, as projected by the economists, or beyond this data, or even below what we have here? And of course, this is definitely going to be affecting how market participants will be reacting to the Japanese yen. And don't forget that last week we had some very important event from the Japanese economy, which of course did affected the yen positively, one of which was their interest rate decision, which came in just as expected at a deficit of 0.1%. But the most important highlight for last week from the Japanese economy was the hawkish remark from the Bank of Japan's governor, Ueda, who mentioned that based on the data he has, that the inflationary pressure in the Japanese economy is gradually reducing and getting as close as possible to their target of 2%. And this is he also further went on to say that if this continues like this, there are high chances that the Bank of Japan will pivot from their current ultra loose monetary policy, which is one thing that buyers of Japanese yen have been looking forward to. And what is said here is that it could become as early as the month of March/April. So based on this comment, we saw how the yen increased traction during the course of last week, but it failed at some point due to the resilient US economy. So today we are going to be looking at how the market is going to be anticipating this event and how we are also going to strategically position ourselves for the next move. So for today, Monday, January 29th, there are no high impactful events, and the only event we have here is from the Japanese economic docket. So with the information we have gathered here today, let's dive right into the chart and let's look at things from a technical standpoint. So the first asset we will be looking at this morning is going to be the USOILSPOT, and I wonder why my USOILSPOT is not loaded up. I actually did loaded this chart up before the session so as to avoid this kind of scenario. Okay, here we go. So it was a very phenomenal week for us last week, as we did scoop in a significant amount of profit. Remember, we were buying this asset throughout the course of last week, and of course we also maximized the potential of the bullish move by having multiple buy entries on this particular asset. Now the question which we head into the new week is, will this momentum continue to the upside, or are there chances that we could witness some profit-taking activities during the course of this week? Now, with the way things are going right now, it's important that we also keep tabs with what is going on behind the scenes that is responsible for the movement of price action in this particular environment. And for if you have been following us for a while now, you will have an idea of what is really going on. However, during the course of the weekend, there are some recent developments which we also want to be taken into consideration before we visit the higher time frame. Now, one of the concerns, and one of the most important I would like to say here, is that the price of oil has hit a monthly peak around the $78.60 zone area, which is a very good sign for a good environment for buyers in this market. However, as we are gradually approaching the end of the month, there are chances that we could see profit-taking activity happen as market participants prepare for the new month. So we need to take that into consideration and keep that at the back of our mind while we review this current market structure. Then another thing about the upward momentum in crude oil has to do with the worries over potential supply disruption following missile attacks on fuel tankers in the Red Sea by the Yemen-backed Houthi rebels. We know this has been going on for over a month now. And of course, we saw how the United States and the United Kingdom had joint military attacks to attack their bases to ensure that they negate the effect of the Houthis in the Red Sea. But this has not reduced at all as they continue to attack. And in fact, yesterday we had the tragic news that 3 U.S. Military personnel died during the recent attack by the Houthis yesterday. And of course, this has prompted active development of specific plans by the United States administration, including possible strikes on Iran itself, which is one thing that may likely escalate tensions and act as a tailwind for crude oil prices. So this has been deliberated on, and market participants are concerned about this and what will be the response of the United States to this recent drone attack by the Houthis is one thing on the table that majority are keeping tabs on, and to see what will happen next. Now we also have the OPEC Plus meeting where they are supposed to have an online conference on the 1st of February. I think it's on the 1st of February. Yes, I think it's on the 1st of February. And this is going to be influencing decisions on output policy. And of course, we know that the current commitment involved by the Saudi Arabia is about 1 million barrels per day, and we have a total voluntary cut of about 2.2 million barrels per day, with discussions on additional cuts varying among members, which will also be deliberated during the course of the meeting. And I'm very sure market participants will be anticipating this event to see what they will be deliberating on and what will be the outcome of that meeting. And I know that during the course of this week, majority will try to major key players in the market will try to want to know what they may likely want to say during the course of that meeting, to give an idea of what they will be doing. But as technical traders, what we are going to be doing is to ensure that we understand the psychology of the price movement by understanding the structures and patterns we see on this chart to give us an insight on what will happen next. Then during the course of last week, we saw we heard of the attack on the Russian oil oil plants, and of course that also affected oil supply in the market, which of course resulted in that rise in oil prices. Now the facilities are undergoing reconstructions right now. And another thing that also affected the oil prices last week was the better than expected figures from the United States, that is the GDP data for analyzed quarter 4, which came in better than expected, like I said earlier. And of course, when how does this affect the US oil? Well, the positive economic outlook suggests that increased demand for oil and energy, as industry will thrive on this, of course. And when there is an improve in oil in activities, definitely the demand for oil will increase, leading to greater consumption and production as well. Then the final one from last week, which is one thing that majority in the market are banking on right now, was the speculation around the People's Bank of China considering a potential cut in the medium-term lending facility rate also adds to the strength in crude oil prices. And we also learned that the People's Bank of China is also planning to inject 1 trillion Chinese yuan into the economy, which will bring liquidity. And of course, if we've been talking about a sluggish recovery in the Chinese economy in the last couple of weeks now, and with this latest development, I think there is hope for buyers in this market. And as a result of this, I still think price has a tendency of climbing to the upside, but that does not mean that we wouldn't be seeing some retracement phases at all during the course of the week. So with all the parameters we've gathered here, let's dive right into the chart and let's see things from a technical standpoint. Now, to start with, we will begin with the daily time frame. And of course, on the daily time frame, the structure we have here has not really changed at all. And for those of you who have been with me for a while now, in the last 3-4 weeks, we've seen this current structure over time, and we are familiar with this. And one of the things we did on the USOILSPOT higher time frame was to take into consideration the nature of price action in the last 4 to 5 months. That's from the month of September. And one thing for sure that we saw here is how price has been finding lower highs in this market, giving us a sign that sellers are very strong in the market. And as a result of this, we connected a series of lower highs, giving us a beautiful descending trend line to work with. However, something interesting happened during the first week of the month of December, where we begin to notice that sellers were finding it difficult to break through that area around the $68 and the $70 zone, and this continued into the early days of this year as we saw a new higher low. And when we take it a step further, we were able to identify a reversal pattern in the form of a double bottom structure, as you will see here, which is technically considered to be a strong reversal pattern, and where we have the neckline of that reversal pattern around our former key level, which was situated at the $75 area. And one interesting thing about this neckline was the fact that it also shares a confluence with that descending trend line. So it simply means that if price breaks out of the neckline, it will also have broken out of that descending trend line for the first time in the last 4 to 5 months, to give us a signal that the trend line may no longer have the capacity to continue to negate the bullish attempt, making it a suitable opportunity for us to buy. And thank goodness we actually took advantage of that momentum as we ride the move all the way into the $78 area, which is going to be serving as our key level for this week. Now, if I zoom into the structure, you will see how the $78 area had been a major barrier for buyers in the last 3 to 4 months. As you will see, every time buyers come into the structure, we saw how sellers jumped in to negate all attempt by the buyers to break out of that structure. And right now price is back into that area. Now the question going into the new week is, will price action break out of the $78 level or use that level as a platform for new highs, or are we going to be seeing a selling pressure just like it has been doing in the last 3 to 4 months to inside price back into structure? Now one thing I would like to mention here is the breakout of the neckline and of course the descending trend line we projected earlier. And we all know that from a technical standpoint, whenever price action breaks out of a key structure like this, there are chances that price may come back to retest the neckline to incite another uptrend continuation, or even come to as far as retesting that descending trend line to incite an uptrend continuation. So this is a possibility I think is likely going to happen, which of course we are going to be taking into consideration while we review the current market structure on the lower time frame. Now if we consider the anticipation of the OPEC Plus meeting coming up on the 1st of February, and considering this week to be the last trading day of the week, and it's also going to be there is a day in this week that will be serving as the first trading day of the new month, we may likely see some volatility in the market that will push price to the downside. Now with this information and understanding, we want to see how market participants are going to react to this $78 level or area during the early hours of the week to decide what our next line of action will be. Now our center of focus for today's trading session is going to be around that $78 area, where we want to look out for patterns and structures that will guide our next move on this particular asset. So what we are going to be doing now is to scale down into the 1 hour time frame, where we are going to be looking out for the behavioral pattern of market participants. Now scaling down into the 1 hour time frame, while I was reviewing this current structure, this is what I was able to come up with. Now as you will see, price did the new week started on a bullish note, price breaking out of that key level to the upside. However, despite the breakout of that key level, we saw that as soon as price got into that $78.50 level, we begin to notice selling pressure resume from that area, and in fact this transition into price action confined within the $78.50 level and the $78 area, which happens to be our key level, to emphasize the prevailing uncertainty in this market at this point in time. And of course, you know how we do it in this community. Whenever we have a range identified on our market structure, we want to exercise patience and waiting for a signal in the form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now with the way things are going right now, and considering this strong bullish momentum from last week's trading session, I already have a buy stop order sitting above the $78.50 level to capitalize on a uptrend continuation. However, if we consider the continued selling pressure around that area since the beginning of the week, the chances of price breaking down the $78 level increases. Now if price breaks down the $78 area, how are we going to be selling right away? Well, if you look at it, we have an ascending trend line here, which I was able to identify on the 4 hours time frame. Let me quickly show you how I did that. So on the 4 hours time frame, after considering the nature of price action since the beginning of this year 2024, it was obvious that price action has been bullish, and in fact I had a couple of ascending trend line to support this idea. But this is the one we shall be using for today, as you will see right now that we had a breakout of the trend line on the last trading day of last week trading session. Now will price come back to retest the trend line? Maybe, to inside an uptrend continuation. And if we look at the distance between where price is right now and that trend line, we have a minimum of 100 pips to catch, which of course we don't want to miss out on that one. Then if price goes ahead to break down the trend line, then we might be looking at another let's see, about another 140 pips into the other ascending trend line, which interestingly lines up with the $76 area, maybe to retest it and inside an uptrend move. So if price really goes down pretty well this week, we might be looking at a minimum of 250 pips to the downside. Now I needed us to see how important this trend line is so that we can have a better understanding into what is going on the higher time frame. So let's scale back down into the 1 hour time frame. Now with the information we've gathered there on the 4 hours time frame, I would like to if we look at this technically, it makes quite a lot of sense to wait for confirmation before selling, considering the fact that we are on a bullish momentum and selling at this juncture is considered to be a counter trend opportunity. So it makes quite a lot of sense that we wait for confirmations like a retest of structure on our lower time frame before joining that decline to the downside. However, considering the fact that I am profitable for this week, for last week, I'm profitable in fact for this year on the USOILSPOT, I can afford to risk some of the profit I've made so far to test waters around that area and see if it will work. And if it doesn't work, I know that I only risk some of the profit I made so far this year. Now in that regard, I will be placing a sell stop order right below the $78 area to capitalize on the bearish momentum, and of course having the I keep interchanging sell stop with stop loss. So having a stop loss right above the 78 or around the $78.50 level, which happens to be the resistance line of that range, will make quite a lot of sense, dovetailing to about 50 to 55 pips thereabout, and of course depending on where your entry point is. However, if you are joining us for the first time, or probably this is your first trade on the USOILSPOT and you are yet to be positive on your portfolio on this asset, then I will encourage you to exercise patience and wait for a retest of structure before joining the decline to the downside. And if price continues to drop to the downside, a further breakdown of the $77.40 level will welcome more selling opportunities. And one thing I would like to emphasize here is that if price drop into that area around the $77.40 level, which interestingly shares a confluence with one of the ascending trend lines we identified on the higher time frame, we should ensure we move all our stop losses, secure the current sell position while we wait to see how the market is going to react to the structure. Because considering this strong uptrend we have here, price may come back into the structure, retest it, and then continue the uptrend to the to the north. So let's see how the market is going to play out around this area. Our center of focus for today is basically between the $78.50 level and of course the $78 area, as we want to see how the market will react to the structure to determine what our next line of action would be. So this is my simple view on the USOILSPOT for today. I hope I made myself very clear, and if you have any questions whatsoever, feel free to drop them in the comment section below. So as usual, I will take the next 5 to 10 seconds to see if there are any questions whatsoever before we move on to the next asset on our watch list. And please don't forget, click on the like button, give the video a thumbs up. Your likes are very, very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. Thank you very much as you do so. So I look forward to your inquiries in the comment section, and you can as well use that time to mark out these levels on your chart. All right, so I see your comment here, Rich FX Asiedu. Good morning to you. Glad to have you around. Trust you had a good weekend. So you're asking here that what stop loss should we use or put when taking the setup? Well, okay. I guess you new with us. Probably you were not with us earlier than expected, of course, as I've always mentioned this during our previous session as regards to stop losses in TP target levels. And one thing I want you to understand is that in as much as I am not, this platform is not a signal service platform. It's more or less a platform where we get to understand the market structure of any asset we are looking at. And of course, when we're trying to understand the market structure, we usually identify levels, structures, and patterns to guide our trading decisions. Now, those levels we have here are levels that we can use to guide if we are going to where we're going to be placing our stop losses and TP targets. Now, for instance, if you are going to be buying above the resistance line at the $78.50 level, you of course want to be having your stop losses right below the previous low of the support line that's below the $78 area. Likewise, if you are selling below the $78 area, you want to be having your stop losses above the resistance line of that range. So that is why we have levels identified on our chart, and those levels also, if they don't play a major role in the entry, they are definitely playing a major role for our stop losses or our TP target. So we are taking all this into consideration. That is why I usually mention that I encourage you to mark out these levels, as you will be needing them to guide your independent trading decisions. And of course, I do not know what your account size is. I do not know what your risk management strategy is. So this is subject to you. It's a subjective decision. So I only come here to help you to make a well-informed trading decisions using these levels to guide whatever decisions you made. So I hope I made myself clear on that one, Rich FX Asiedu. And will you advise limit order or retest of structure? Well, that is dependent on where you are with us. Now, like I usually say here, if you're profitable on that asset, that is, if you're profitable on this asset so far, maybe throughout the course of the month or throughout the course of the week or throughout the course of the day, then you can afford to place a buy stop order or sell stop order, since you know that you're only going to be risking some of the profits you had made so far. So if you place a buy stop order and the trade doesn't work, then you know that you are only risking some of the profits you are making. And if it works, then thank goodness you continue to maximize the potential of that move. However, if you are new with us, you want to be waiting for a confirmation to happen, like a retest of structure before joining that move. That means if you are new with us and you don't have any leverage at all, you don't have any profit whatsoever prior to taking this decision, then I would advise and encourage you to wait for the structures to retest. Then you want to join that move. I do hope I made myself clear on that one, Rich FX Asiedu. All right, so in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, we shall be moving right into the next asset on our watch list. So the next asset on our watch list for today is the USDJPY, and last week was not impressive at all for us on the USDJPY, as we struggled with both buying and selling opportunities. We had the privilege of selling at some point, which with the traction moved like 100 or 80 pips thereabout before price came back into our entry point, closing out at break even. And I think we had a loss on the USDJPY last week after buying, and the price did not gain any traction at all before it took us out at our stop loss. So last week was not really an impressive one compared to the other week where we scooped in over 800 pips in profit on this particular asset. And of course, we know why this is. We talked about this throughout the course of last week, as key players in the market were stepping aside in the market, waiting for fresh impetus from the economic features that list throughout of last week. We were waiting for features from the United States, from the GDP to the labor sector data. We also had the core PCE too as well, and of course we had various events last week. And whenever we have a week list with a bunch of events like this, we usually see consolidation phase or choppy market conditions as market participants anticipate this event. And we also heard about the hawkish comment from the Bank of Japan governor, where he did mention the possibility of pivoting from their current ultra loose monetary policy as early as the month of March/April, which of course is a very good news for buyers of the Japanese yen, that is sellers of the USDJPY. I hope you understand what I mean by that. And as a result of this understanding, we've had quite an indecisive phase in this market throughout the course of last week. And before I go further, I want to reiterate here that if you had not watched my weekend video on the USDJPY, please do, as this will give you a better understanding into the current market structure, and of course understand the psychology behind price movement. If you had not watched that video, I have the links right in the description box of this current video you are watching. You can go ahead and check them out after the end of this live session to have a background knowledge of what we are talking about here, as I will only be focusing on the 1 hour time frame, which happens to be our execution time frame. So going into the details here, we saw that during the course of the Asian session, that is the beginning of this week, we saw how this market attracted some new buyers during the course of the week, course of the early hours of the day, leading into some positive buyers in favor of the Japanese yen. And of course, the heightened conflict in the Middle East are also fostering cautious sentiment among market participants, leading to a generally softer tone in equity markets. If you look at the equity market is currently in an indecisive phase, and this combined with the Bank of Japan's hawkish stance from last week, which I did mention earlier, signals a potential shift away from extensive stimulus, and negative short-term interest rate may be providing support to the yen at this point in time. However, with all of these factors in mind, we cannot ignore the diminishing likelihood by the Federal Reserve, coupled with the uncertainty about the timing of the Federal Reserve interest rate cuts, which may restrain any significant USD decline at this point in time, especially as we look forward to major events during the course of the week, like the non-farm payroll. And of course, we also have another one. Let me see. We also have another major event for this week. Okay, yes, the federal interest rate decision, which is coming up on Wednesday's trading session. So these are things that we need to take into consideration while reviewing this current market structure. Now, if we take all this into consideration and couple with the technical structure we have here, we should be able to make some decisive decision on this asset. Now, the first thing I would like to emphasize here on the 1 hour time frame is the fact that in fact on the higher time frame generally, is the fact that since the beginning of this year 2024, the USDJPY has been on an ascent. It has been continuing to find higher highs and higher lows, and in fact, if you watch my video on the USDJPY, we had a beautiful ascending trend line to project this idea. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we will continue to look out for patterns and structures that supports the idea of buying. Now, the ascending trend line I'm talking about on the higher time frame is right here, visible on the 1 hour time frame, as you will see right here. And of course, price action has remained above this ascending trend line since the beginning of this year. And if at any point in time this week price breaks down this ascending trend line, this will be the first time price will be breaking down the structure since this year began, and that may likely incite a very strong bearish momentum to the downside. Now, in addition to this trend line here, I had a couple of levels after trying to understand what market participants are doing around the structure. And one of the things we did talk about in my video on the USDJPY is the fact that price remains below our key level, which is situated at the 148.800 area. Now, if you watch that video, you'll see how this level had played a major role in determining the direction of price action in the last 5 to 6 months. And in recent times, we saw the breakdown of that structure. And since price retested that structure a couple of weeks ago, price has been trading below that area. And you know how we use our key level. Whenever price remains below the key level, we always want to look out for patterns and structures that supports the idea of selling that asset. Now, if we look at what has been going on since the beginning of this week, though the week started on a bullish note, as you will see, price climbed up, and as soon as it tested that level around the 148.340, we saw a sharp rejection of that structure, giving us signs that buyers are finding it difficult to break through that area. And to make things more easier for us to understand, we have a shooting star candle, as you will see right here, which further emphasizes the strength of the sellers technically. Now, with the character of price action since the new week has begun, we can see that price action was initially confined within the 148.340 and the 148.00 area to emphasize the prevailing uncertainty in this particular market. And you know how we use our ranges when we identify them on the chart. We exercise patience and wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And for those of us who capitalize on the breakdown of the support line, well done to you. Kudos to you for being on standby to capitalize on that move. But I want to also emphasize here that the breakdown of that support line isn't really a suitable confirmation that truly price is likely going to be nose diving, as this may turn out to be a short-term downtrend movement, possibly because of the fact that price still remains above that ascending trend line we projected earlier. Now, the breakdown here will only make quite a lot of sense for us to continue selling if price does break down that ascending trend line and continue to find selling pressure below the trend line. But as it is right now, we have a sell position triggered. But for those of us who missed out on this opportunity, well, let's exercise patience and see how the market will react, if it will give us another opportunity to join the decline to the downside. And of course, we do know that from technical standpoint that if price breaks down a structure such as the 148.00 area, it's a psychological level. Considering the round figure of that price, we expect that price may come back to retest the structure at some point in time to incite a downtrend continuation. So if we missed out on that bearish opportunity, let's see if the market will come back, retest the structure to incite a downtrend move. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. Now, if price continues to drop to the downside and it breaks down this ascending trend line, then we shall be looking out for more selling opportunities to join price to the downside. And in fact, if price will break down this ascending trend line, I'm of the opinion that the move is likely going to be very, very massive. So let's see how the market will play out. It's looking bearish at this point in time, as the only condition for me to consider buying this asset is for price to break out of the 148.340. I have a buy stop order above that structure already to maximize the uptrend continuation. However, that doesn't mean that we cannot see buying opportunity even before the breakout of that structure happen, especially considering the fact that price still remains above that ascending trend line that started this year. So let's see how this will play out in the next couple of hours. And of course, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the USDJPY. I encourage you to mark out these levels and trend lines on your chart, as you will be needing them to guide your independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take 5 seconds off to see if there are any questions before we move on to the final assets on our watch list for today. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we can move ahead to the last asset on our watch list. So the final asset on our watch list for today is my favorite asset, of course, and that is the XAUUSD, popularly known as the gold spot. And the same thing that happened with us on the USDJPY was the same thing that happened with us on the XAUUSD for last week's trading session, as we had a couple of losses on this particular asset. And in fact, when price moved in a particular direction, we really didn't see that traction to push price further in that particular direction, as every point in time price usually comes back into our entry point, taking us out of those positions. And we talked about why this has happened during the course of last week, as we saw market participants anticipating the major event, all of which they were looking for signs of when the Federal Reserve will likely cut interest rate, the timing that Federal Reserve will likely cut interest rate. And last week was absent of any Fed official speeches that will probably give market participants clues on what to do. So it was more of a limbo situation, as market was just juxtaposing within a precise range. And I understand the pain that majority of us will have as a result of that, and that is why I mentioned earlier that it makes quite a lot of sense to diversify your portfolio, ensuring you have an asset in a different sector or financial environment different from the one we are trading on the XAUUS. That is, have one, like I told you earlier, I have in the energy sector, that is the oil. I have in the metal sector, we have in the safe haven asset sector, that's gold. I have in the currency sector, depending on whichever I choose for the week, that is between the USDJPY or the GBP USD. And I also have in the equity, that is the US Tech 100, popularly known as the Nasdaq. So spreading your asset across major sectors is one way of ensuring you have a well-defined risk management strategy. So I did mention that earlier. So let's see what is going on so far and how we intend to capitalize on the next move. And let me quickly state here again, especially for those who are joining recently, in recent time, I did a video, a top-down analysis on the XAUUSD during the course of the weekend. I encourage you to go ahead and watch that video so that you can have a background knowledge of how we got to the point you're seeing on this chart right now, because we're not going to be going into higher time frame during the Forex Morning Mastery. We only focus on the 1 hour time frame, which of course is our execution time frame. And if you missed out on my weekend videos, I have the link in the description box of this current video you are watching, so you can go ahead and check them out after the live session. So with that being said, let's quickly talk about what is going on in this market from the geopolitical tensions between the Middle East and the United States. Of course, this is expected to incite the appeal for safe haven assets such as the gold. And additionally, hopes of a soft landing for the US economy have pushed US Treasury bond yields lower in recent time. If you check the US Treasury bond chart, you'll see that as at this morning, it dipped a little bit too. And we do know how the US Treasury bond yield is directly proportional to the value of the US dollar. So if the US Treasury bond yield drops, the value of the dollar will drop too as well. And if the US Treasury bond yield rises, the dollar also will rise. And with a dip in the US Treasury bond during the early hours of today, this has failed to assist the US dollar in breaking through a nearly two-week-old trading range. If you look at the DXY, you see that the US dollar has been caught within a range in the last couple of weeks to emphasize the level of indecision. And in fact, we did talk about this last week, and we know the reason why this is. Of course, I don't need to reiterate that all over again. Now, as it is right now, the indecisive, the diminishing likelihood of a more aggressive policy easing as projected by the Federal Reserve during the later part of last year is likely going to limit the upside of the safe haven assets unless we see very significant data to give us an idea that of how the timeline for the rate cut is going to be like. And probably since after the federal interest rate decision on Wednesday, the Fed chairman is going to be speaking during the FOMC press conference where he will be attending to questions from the media. Probably we could have an hint on that one, and this may likely give us a better idea of how we plan or how we get ready for this policy easing approach. So as a result of this, we might likely going to see some consolidation facing this market into Wednesday's trading session, after which we know we have an idea of what will happen before a huge traction will happen. So based on that and based on these parameters, how do we intend to position ourselves for any short-term trading opportunities for today? Now let's look at the structure from a technical standpoint. Now right here on the 1 hour time frame, I want to show you something here. Remember, if you had watched my video on the XAUUSD, we had this descending trend line, which of course has emphasized the strength of the sellers since the beginning of this year 2024. I told you last week that the year 2024 started with profit-taking activities, as those who bought the gold through the later part of last year may have been taking some profits off the chart, and as a result of this, we saw price finding lower lows and lower highs throughout the early weeks of this year. However, despite the series of lower highs, we saw how that area between the 2010 and the $2,000 area had played a major role in negating price to drop further to the downside. So sellers have been finding that area difficult to break through, and of course I think market participants are seeing that area as cheap enough for this asset to be bought. And as a result of this, and looking at what happened at the beginning of this week, you will see price has just broken out of that descending trend line for the first time. And price breaking out of this descending trend line is a good signal that buyers still have a say in this particular market. And whenever price action breaks out of a key structure such as this, it is a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt, and we may likely see something like a breakout and retest of structure this week to incite an uptrend continuation. And if we take a closer look at the other possibility too as well, it could turn out to be a false breakout. So now, how do we manage these two expectations so that we can be on the positive side of this market environment? Now, zooming into the structure, you will see that the new week started on a strong bullish note, and in fact for the first 8 hours, price action was confined within the $2028.50 level and the $2019.20 area to emphasize the level of indecision in this market. And of course, whenever we identify a range like this, we usually exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And as it is right now, price is yet to break down the support line, but instead we have seen the breakout of the descending trend line, a very good bullish signal. We've seen the breakout of the resistance line at the $2028.50 level to trigger our first buy position for the week, and I do hope you capitalized on that opportunity. Now, in the last 2 hours, we have been noticing some selling pressure around that $2033 area, which for me may lead to price retesting this ascending trend line in anticipation of another wave of bullish momentum. So make sure your stop loss is somewhere below the ascending trend line, dovetailing to about 50 to 70 pips depending on where your entry point is, and let's see how the market will play out from here. So at this point, we hold on to a bullish bias at this juncture as long as price action remains above the ascending trend line. And please take note of this, that we may likely see price drop into the structure, and if it does and price transitions into, let's say, a reversal pattern in the form of a double bottom structure, we are likely going to see the uptrend continuation. So I would like to buy the breakout of the neckline again to maximize the potential of the bullish move. And if price continues to climb new highs, breaking out of the $2035 area, I will be adding more buy position, as I already have a buy stop order above this particular structure. So this is how we shall maintain a bullish bias on this asset, and let's see how the market is going to play out going forward. And I did mention that we're likely going to see a consolidation phase prior to Wednesday's trading session, when the Fed chairman is going to be speaking. Remember what I said there. So please don't let us get too nervous if sellers come in at some point. Let's give enough room for price action to breathe. Now, in as much as we're looking at the possibilities of buying, the only condition that will make us sell is for price action to drop below the descending trend line. And in fact, the breakdown of the support line of that range would be beautiful enough for us to join a decline. And if price continues to drop to the downside, a breakdown of the 2010 and $2020 area could welcome more selling opportunities. So far today, our center of focus is going to be between the $2028.50 level and the $2019.20 area, where, depending on the direction of the breakout, will determine where price is likely going to be closing for the month of January. So it's on this note, I think I made myself clear. If I didn't, or you need some further clarifications, feel free to let me know in the comment section below. So I will take the next 10 seconds to see if there are any questions before rounding off on today's Forex Morning Mastery session. And that reminds me, I really appreciate your support so far. I've seen your likes in the comment section. Your likes, 11 likes so far, and we had up to like 18 views today, 18 participants today. Please, if you are yet to click on the like button, please do. It really means a lot to me, and it's the cheapest way you can actually support this project and help this community to grow as well. And thank you very much as you do so. So with that being said here, and that reminds me again, I dropped the link to the XAUUSD live window right in the comment section. I pinned it at the top, so you can click on that link, click on the notify me button so you can get notified as soon as we come on live. Now, for those of you who don't know what the XAUUSD live window is all about, well, this is a platform that was born out of popular demand from the members of this community, where we come together during the New York session to monitor real-time price action on the XAUUSD. So during this session, we have you see how we position ourselves for the next move, how we manage existing positions too as well. So you want to be part of that session, and I look forward to seeing you all right in the comment section of that session. So it usually kickstarts about 5 minutes into the New York session, and it lasts for about 5 to 7 hours depending on the nature of trading activities for that day. So I look forward to seeing you guys in that session too as well. So I think okay, I can see a couple of comments here. Okay, you're welcome, Rich FX Asiedu. And then I see you, Adeni Babalola. Good morning to you. Glad to have you around with us this morning. Trust you had a great weekend out there. And you said congratulations. I am so you don't believe I didn't notice this. Wow, that's great. That's phenomenal. Thank you everyone for the support. I really appreciate that, and you are indeed very appreciated. Thank you very much, guys. You're welcome, Adeni Babalola. Thank you very much for bringing my attention to that. FX Cool X3, good morning to you. Glad to have you around with us. Thank you for checking in. I see you, Nwachineke Peter Jr. I'm just joining the live session for the first time. I'm learning how. Oh, that's great. I'm always excited to have newcomers in the house, and I hope you are able to learn a couple of things during the course of the session. And if you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to make your own independent trading decisions. So once again, you are welcome, Peter Jr. Glad to have you around, and I do hope you subscribe to the channel, as you don't want to miss out on any of the contents we share here. So on this note, I would like to round off on today's Forex Morning Mastery session. It has been a wonderful moment with you guys, as I really enjoyed every single moment with you. I love the energy, and we were able to take on 3 of the major assets we have on our watch list for this week, which includes the USOILSPOT, the XAUUSD, and of course the USDJPY, all of which we were able to identify simple trading setup using our basic tools such as trend lines, key levels, and chart patterns only to identify potential opportunities ahead of both the London and New York session. I do hope you are able to mark out these levels on your chart. If you did, well done to you guys. And all we just want to do right now is to exercise patience and wait for the structures to mature before jumping into any positions. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And as a result of this understanding, you want to be having a well-defined risk management strategy in place to mitigate against any sudden pullback against any particular direction we have taken. With that being said here, and for those of you who joined us for the first time, I do hope you are able to gain 1 or 2 things from this session. If you did, that's great, and I look forward to seeing you in our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own trading decisions. So I look forward to seeing more of you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and at the same time prepare for tomorrow's trading session. So on this note, I wish us all the best of luck, and I will continue to give you updates on both my TradingView and Telegram platform, and of course during the XAUUSD live window as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.